Canadian housing is now the most affordable it has been in 3 years. That's the headline RBC just dropped. But the mortgage delinquencies in Toronto have tripled in just 1 year. Rents are falling, but slower and slower. And people are still forking over 60% of their income just to own a home. So what's the real story? Let's unpack it in plain English. Let's go. So what RBC wants you to know? RBC says housing affordability is getting better. The latest data shows a typical home now eats up to 59.5% of pre-tax household income. That's down from 62.7% in 2022, the worst level in Canadian history. So progress, right? Sort of. But when more than half of your income goes into just keeping a roof over your head, that's not really affordable. That's barely surviving. In an ideal scenario, your housing should not exceed 1/3 of your household income. But hey, this is Canada. Let's look at what's really happening. So the home prices are falling not because of a recovery, but because of desperation. Mortgage rates are still hovering around 4 handle. Sometimes it is 5% if you're taking a fixed term mortgage. And buyers are cautious, right? What about rents? They have fallen 9 months in a row, but the pace is slowing, meaning we are about to hit the floor very soon. What about mortgage delinquencies? In Toronto, they have tripled, hitting their highest level in over a decade. Let that sink in. Triple the number of people falling behind on mortgages. Rent declines are slowing down. Prices are down as well, but no real recovery in demand. That's not a healthy market. That's a market bracing for impact. Affordability isn't just a monthly payment. So RBC uses the Affordability Index, the percentage of income needed to carry a home. Sure, that index is down slightly, but what are you really getting? Still high prices, still high interest, still low supply. And an economy where wage growth is slowing, unemployment is rising, and immigration is cooling down. In Vancouver, 93.6% of income just to afford a home. In Toronto, that is 82.8%. Staggering numbers, right? Even if mortgage payments are technically cheaper, how are people affording them? The answer is they're not. Which brings us to the quiet crisis, the mortgage delinquencies. Better Dwelling reports that Toronto's delinquency rate just tripled in 1 year. Why? Because all those 5-year fixed mortgages from 1.5% era are starting to renew at 5%. For some homeowners, that's like taking on a second mortgage overnight. And if you are on a variable rate, you're already bleeding, right? So while the headlines say affordability is improving, the cracks are widening behind the scene. What about rents? Rents are falling, right? But not for long. Yes, the rents are down, but why? Let's ask a question. Simply because immigration is slowing down, unemployment is rising, people are downsizing or moving back home. Rents are a function of population growth. If the population is not expanding, definitely rents will not be expanding either. It's not rent becoming affordable, it's demand weakening. And with landlord cost rising, especially mortgage payments, taxes, wear and tear, we could see pressure for rent hikes again if rates stay high into 2026. So where is this going? What we are seeing is the midpoint of a long, painful correction. Prices fell a bit, affordability improved on paper, but buyer sentiment is weak, delinquencies are rising, unemployment is up, per capita GDP is flat, and immigration is tapering off. This is a soft landing that's starting to wobble. Unless rates drop aggressively and soon, we may not be out of the woods at all. So what should you do? If you are a buyer, don't rush. Wait for clarity. Don't assume prices will rebound fast. Do your homework. Don't just trust the headlines. If you want to understand how all of this connects from interest rate to delinquencies to rent dynamics, check out my macro fundamental course, link in the description below. And join our growing WhatsApp community. We have got the smart investors and everyday Canadians all figuring this stuff out together. Because real estate is emotional, it's personal, It's never just about the numbers, especially in Canada. So next time you hear housing is affordable again, just ask affordable for who? On that note, hit the like button, subscribe to the channel, and share it with someone being told this is the time to buy. We do things differently around here because we read between the lines. See you in the next one. I just wanted to let you know that I also offer one-on-one consulting calls to the individuals who are looking to discuss their financial planning, their investment strategies, their kids' education planning, their immigration moves, as well as the young professionals, because I have been in the tech industry for almost 20 years. So I also offer one-on-one consulting calls to the young professionals who are looking to have their career development discussion with me, and also personal branding as well. So if you are looking to have some sort of an expert opinion, there is a calendar link in the description below. Book a 30 minutes call with me and I will be more than happy to help you out.